So it is September 2022, and just want to kind of give you guys a quick update of what's going on in the market. Overall, the market's doing okay. We do have the inflation numbers that came out a little bit higher, which has caused interest rates to go up a little bit. We're probably hovering a little bit over that 6% right now. Hopefully, as things kind of stabilize, we see the Fed coming out in another week or so, and hopefully what they do, they're going to probably raise 0.75 of a basis point, but that's already built into the markets. In August, we saw when rates dropped to about 5.25, we saw a pickup in demand. And I think once we have a stabilization, we will see some kind of good growth going there. And the reality of it is I was at a networking function the other day, and people were saying to me, Eric, I remember when I was buying a house, the rates were 17%. And it's very true. And I think that the reality of it is these are still great interest rates. They're just a lot higher than what we had artificially for 2-3 years. So now as things start to stabilize, buyers are still out there. There is still a lack of supply out there, and that is creating a balance. We're not seeing the 20 offers like we talked about, but we are seeing 1, 2, sometimes 3 offers on a property, depending on where it is. So I think as we're coming around, we probably have created a little bit of a floor going in there. What we're seeing is as over the summer, it was a little bit of a lull as things adjusted. June was really that cutoff time of saying, okay, if you went the contract before June to after June, there could be a fluctuation in that price for the same property. This summer was, okay, what's going on with the market? How is the housing market? Rates are at 6%. Then, like I said, we saw those rates drop in August, and that was definitely a big kind of boost up. It kind of created that floor as we're kind of going up. A lot of the housing economists are talking about not that we're going to have depreciation, but we're just going to have a slowing of appreciation. We're going to create that floor. Maybe we see 2 or 3% growth, in property values versus 10% in a year. That's not the worst thing in the world. And even if we did see a couple percentage points down of depreciation, we were up probably 20 to 40% over the last couple of years. So we're seeing that kind of market that it's kind of bouncing a little bit there. And one of the biggest things that is causing that is there still is a lack of inventory out there. We're going to see this probably for the next year or two, because if you did refinance into that 2.75 or 3% rate and you don't have a need to make a move, it may not make sense to sell the property. I've sat with a lot of people lately and they're like, hey, Eric, I did a refinance 2 years ago. I got that low interest rate. I got the kids in the school district for another 8 years. Should I sell? And most of the time, unless there's the life factor, it doesn't make sense to sell. So we're seeing that kind of balance out there. A lot of times it's a good thing to check, hey, Eric, what's the value? Where are we going? What do we do? And I'm always happy to kind of do that with my clients to go through and say, is it worth it? Is it not? Sometimes it is, sometimes it's not. So we look at that going there. The biggest change, obviously, in the market is the interest rate. The average mortgage payment across the U.S. went up about 53%. The average was $1,265 to now it's $1,944. That is a big jump as you're kind of going around, for those things. And obviously, if you're borrowing more money, it is a bigger jump there. How are people combating it? They are putting more money down. The banks are getting creative with some buy down programs and coming up with lower down payment stuff to kind of balance things out. We're not seeing the meltdown of 2008 that we had. We're seeing some stabilization. And one thing that I learned, including in the market in 2008 and 2009, is if we had something big that changed the market, it took about a month and a half to kind of stabilize, and then that was the new norm. And that's what I think we saw over the summer. So we're seeing that balance now, that stabilization, and that's really what we kind of want to see. Definitely when we look at what household income versus qualifying income is there, and obviously you need to make more money to qualify the mortgages today, because obviously the rates are up. So we're seeing that kind of change there. Average on the U.S., we haven't seen that much of a change, from median income to qualifying income. Of course, markets like New York, California, they're going to be a little different story. So as we're coming around, the market generalized is overall in a pretty good place. We want to see, more properties come on the market. We're going to see come stabilization. We'll see what the winter brings this year with the weather. But definitely, people are buying, people are selling. There's definitely room in the market. So if you have any questions, want to check, see, is it the right time for you to buy? Is it the right time for you to sell? Reach out, then let's chat.